The big question for this week is, will the US dollar dominance continue? Will gold continue shedding weight? Well, we're going to find out in this analysis. So this is welcoming you to the Picture Clock weekly analysis for the week, November 18th to 22nd. So let's sit back and take notes of what to expect this week. All right, so you want to cross-check with the economic calendar to know any major events that could interrupt our analysis so that you know when to take a break and then return to follow your analysis. So let's go. So we're going to start with gold. All right, so if you look at the gold chart on the weekly time frame, so you can see that gold has recorded a new low already, and this low has covered, if you count, you can 1, 2, 3, 4, 5, 6, 7, 8. So this is like an 8-week low since gold started recording new highs. Okay, so the question is, will this continue? Is gold going to record a new low? And if you look at the chart the way it is, look at these two candles, you'll see that having recorded series of lower lows, that's lower low comparing this past week and the week before, there are high indications that gold will certainly record a new low this very week. So take that into account while you are prepping for trading this week, okay? So weave that into your trading decision in any case. Okay, so gold is bearish. We've seen it, it's bearish. So the question is, where can you find opportunity? Let's dive into it quickly. All right, so let's switch over to the daily time frame and see if we have any clues there. On the daily time frame for Friday, we see a hammer formed here, and the next candle after it couldn't beat the low. Okay, so this is an indication that from Monday we may likely see a gold that will retrace upwards. Yes, it's bearish, but we are going to see a retracement upwards. But at what level should you get into the market? Should you start buying or should you position yourself for a sell? We're going to be looking at the key levels shortly. So, but before we get into the key levels, let's quickly check what is happening on the 4 hours time frame. So on the 4 hours CF, what we have here is still a bearish scenario, and if you would bring in the 200-day moving average, let's quickly introduce the 200 period moving average into this, and let's see. We just only bring in only the 200 period moving average. Yeah, any further details can be handled off this page. So let's quickly bring that in. So on the 200 period moving average, of course, you see on the 4 hours time frame, price is trading bearish, far below the moving average. And if you switch it back to the daily time frame, you will see that it's still uptrend. Okay, it's still uptrend. Even on the weekly time frame, it's still uptrend. So what you have here is a retreat, more like a correction for the week, for the higher time frames. So for retail traders, you want to pay attention, take into account what is happening in the bigger picture. So whatever we are doing here, don't lose sight of that, okay, until a major reversal takes place. So quickly, let's go back to the 4 hours time frame. So on the 4 hours, we see a market that is ranging here. Okay, there's a range of price is ranging around here, and you want to also pay attention to that. So you want to pay attention to this level. So we might experience a little range before a breakout will occur. To which direction should we expect breakout? That I may not be able to tell you, but what we're going to do is that we're going to be using the key levels to actually position ourselves for whatever the market brings us. So first, let us check the weekly pivot points for gold. So here we have on edforex.com using the pivot calculator. This is for gold. So we have the weekly pivot points at 2595. So quickly, let's check 2595. 2595 is somewhere up here. If I will bring this, let me quickly bring the 2595 is somewhere around here. You see it around there. Okay, so that's where we'll be seeing that. Now, if we would take that into account, before we get even to get any further, let's also look at the other pivot. This is from the floor pivot point, but if you look at the Woody's pivot is giving us a 2587, so very close to the pivot point, right? To the floor pivot point. And then Camarilla sell is telling us showing us at 2590. So if we take Camarilla sell, take Woody's, and then take the weekly pivot point, and considering that it's a bearish market, so we are gradually forming a confluence around the 2587 to 2595 zone. Okay, take that into account. So now let's bring in the Fibonacci retracement, and we're going to run it from here. Okay, so let's run from here to, because we're looking for the 50% retracement. So let's run from here to the high of the week before, where this whole thing started. Okay, or we could, if we take it further up, it might not really go well. So let's see if we can find a confluence that will match what we have there. Even here may not really match it well. So let's also come here. Okay, let's come here, or we could actually take the high of the past week, and the high of the past week is somewhere around here. So where you just have that 200 period moving average. So based on that, we see that even the 50% retracement is around 2611. So if price is unable to break past 2596, so you want to look out for signals around 2596 area. Okay, but if at all, if it pierces beyond it to go to 26 levels, then 50% retracement will be a very good place to place an order. So if I were to give you a signal, I could tell you, okay, sell at 2596, also sell at 2611. All right, of course, place your stop loss above 2686, maybe 2690, right? And then your target, of course, this is the first target here at 2536, and the second target you can actually chase it to this place to 2443. But will the market get to that place? You never can tell. So that's the much we can give you on gold. So quickly, let's dismantle this so we can bring in the other instruments. Okay, so let's bring in GBPUSD. And so for GBPUSD weekly time frame, we see a bearish market. We see a bearish market here. Okay, so and still a series of lower lows happening, and dollar strength still being magnified here. Same with Euro USD. If you check, you see the same thing there, and all of them, both of them are operating below the 200 period moving average on the weekly time frame. Now, if you will switch over back to GBPUSD so that we can do it one after the other, look at the daily time frame. The daily time frame for GBPUSD still showing bearish, trading below the 200 period moving average, and we still have series of lower lows and lower highs here. Okay, now let's go over to 4 hours and see whether we have any information that could guide us to know where to actually trade. And on this 4 hours time frame, let's also look at the, before we get into bringing the Fibonacci retracement tool, let's also check the pivot points calculation, and this is it. This is for GBPUSD here, and what we have here at the pivot point is 1.2707. 1.2707 is somewhere around up here, 1.2707. Here is it, 1.2707, 1.2707. So we just take it up here, 2707, somewhere around here. Okay, 1.2707, right? I think I got it. 2704 rather, 2704. So, well, they are still within the same range in any case. So that's it. Now around there, you also have the Woody's is showing us 2791, and while Camarilla is showing us 2679. So we may not really find a confluence with the other pivot points. However, let's work with the floor pivot point and Fibonacci retracement tool. So let's quickly plot the Fibonacci, and we will also run just for within the last week, and that's between here and here. And that will allow this. Why I'm using this is to see whether we could hop into the market early enough in the week. But anything can change, because if things change, you have to adjust. All right, which is why you may want to be in the trading in our Telegram channel, so that if there's any update, we can always drop it there. Okay, so you have with the 50% retracement at 27613, and that's quite a distance away. And this is not very clear, so you may want to operate on a per 1 hour basis. Yes, you want to operate on a per 1 hour basis, and that will be as the market unfolds. All right, and you begin to see what you can trade. So we may not really give you a clear signal based on the 4 hours time frame right here until the market resumes and we see the tone is going to operate with. Okay, so quickly let's check on Euro USD. And on Euro USD, of course, we already have seen the 4 hours, the weekly time frame rather, and even if everything is almost in sync with what is going on with GBP USD. So let's see whether we can actually pick. Let's see where the 50% retracement falls into based on the high and low of the past week. That's around 1.06117. 1.06117. So let's check the floor pivot point for Euro USD the past week. And the floor pivot point is 1.0586. 1.0586. Remember, we have 06117. We have 0 there, while this offers us 1.0586. Then you have the Woody's is at 1.0649, while Camarilla is giving us at 1.0576, almost in sync with the floor pivot point. So, but then we have a DMAC high and low. The high is at 1.063, which actually is in sync with the Fibonacci. So you want to actually watch out for these key levels and see what could happen. Now, I'm not going to be advising you to buy because of the way it is. I think we have to just look for opportunities for a sell. Let's look out for opportunities for a sell, because that's what the market is still saying until the trend changes. So this is just like a minor trend happening. A minor trend, yes, happening, because big picture, all right, big picture is being uptrend. If you will, let's put this up here. Big picture, oh, come on, I think that's big picture is downtrend still on weekly. Look at it on weekly, it's downtrend. On daily, is downtrend. So let us just look out for opportunities to sell. So even if it's begins to go up, because from what we have here, this inverted hammer apparently might likely push price up. So just watch out to make entries around these areas, okay? But then you have to trade. You want to trade with tight stops and manage your position size well. Don't expose more than 2 to 3%, so that you'll be able to confidently navigate through whatever volatility that comes along the way. I want to believe that with this guide, you'll be able to make and keep your profits during the week. From all of us here at Pips O'Clock, we want to wish you a very profitable and exciting Green Pips week. Thank you, and God bless you.